All right, guys. Today we are going to talk about the what I like to call Pied Pipers of market madness. And now that it's been a few months into 2021, post the 2020 crazy tech boom high growth rally, we're now starting to see things. We're really starting to see the dust settle here. And I want to talk a bit about people like Kathy Wood, Chamath Palihapitiya, and more. Now, why has all of this been occurring? Why are people just being taken up in herds and just going into what are known as meme stocks or going into high growth stocks or going into Bitcoin and so on and so forth? Well, I can give you a very quick breakdown here, and it has pretty much everything to do with this. And as you can see here, we have the 10-year Treasury note yield inflation indexed next to the SPY, which is a representation of the movements of the S&P 500, going all the way back to February 1st, 2003, monthly, up until now. What you see here is that over this period, we have a negative, moderate to, let's say, somewhat strong correlation between the two, meaning that the yield that you would get from the real yield that you would get from placing your money in the safest asset that, generally internationally is looked at as one of the safest assets, the yield that you get, the real yield, has just been going down, and currently it's in negative territory, while you're starting to see money pile into one of the safer indexes that you can find, which are some of the strongest businesses within the United States, represented by the S&P 500. So what does that tell you? It tells you that generally people are becoming less and less savers, putting money into, the quote unquote safe havens, less and less savers, and people are generally shifting into becoming risk takers. Now, this isn't necessarily a bad thing, but what happens is while this transition is taking place, there are people who are eyeing this and taking advantage of it because they see where the energy is shifting and they want to capture some of that energy. And they want to capture some of that energy in what they are hoping to be low entropy infrastructures. So one person being a Kathy Wood, who has an ETF called ARK, ARKK is the ticker symbol, ARK Innovation, which is one of her most known ETFs. Now, the thing about Kathy Wood that I actually find interesting is that she cannot stop saying the word innovation. I mean, it's here. Innovation is the key to growth. And maybe it's just something to do with her brand recognition, but literally in almost every tweet, she uses the word innovation. You see it here, especially innovation-based strategies. You can scroll down and find some more Kathy Wood tweets. Let's see. Here's another one. Bull market and innovation's place has increased as fears. It's almost kind of like she's trying to hypnotize people into just thinking about the word innovation in the future. And yes, we should expect innovation in the future. That's generally what we've been doing as we've been progressing as a species. But as far as the near term is concerned, and as far as people placing, as you know, a lot of money into ETFs such as ARK or maybe into Bitcoin, for example, people are losing their shirts. And as you know, ARK hasn't been doing too well. Let's take a look at Bitcoin. We can take a look at some of the liquidations that have been happening in Bitcoin recently. In the past 24 hours, 64,954 traders were liquidated in cryptocurrencies. The largest single liquidation order happened on BitMEX BTC, valued 2.18 million. Now we can also take a look at some of the more. We can also take a look at some of the more detailed liquidations that we saw here within cryptocurrencies. And the thing about cryptocurrencies, which is also what we're seeing running parallel with the S&P 500, is that yes, people are seeking risk in the S&P 500, but they're also seeking even higher risk and higher returns in cryptocurrencies because they have fatter tails. There is higher tail risk here. And I'll show you that very shortly here. Now, the thing about the fatter tails and higher risk that you take on with cryptocurrencies, let's take a look at Bitcoin, for example, is that when you put money into it, if things are going well, you're going to be rich. But if things are going very poorly for you, you're going to lose your shirt. And if you take a look at the price distribution here of Bitcoin over time, this is going back into, I believe this date range is going back into 2014 here. But as you can see, these tail risks, to the upside and to the downside are pretty large. Let's go back to the date range. So we can take a look here and see how far we can go back. This is going back to, see, this 2017, 2016, 2015, roughly 2014. So this is a lot of data here. And basically what we see is that there's a lot of tail risk here in Bitcoin. Let's take a look at Dogecoin, which is another big one that people were getting into. And you have these news sites talking about Dogecoin millionaires and just ramping up the fever pitch here. I mean, just look at this. I mean, this is not a normal distribution of a Gaussian curve here. This is insane. It's pure insanity. But look at the tail risk here in Dogecoin. Yes, there's a good high, reward here that you can get if you hold on to it and you don't lose your shirt. But there's also a large risk here. Now, the thing is that a lot of people who get into crypto, they may take out what's known as margin, which is debt, and they have to pay that money back if their position goes against them. And because they're leveraged so highly, it doesn't take that much for them to be liquidated. And that's why you see things such as in the past 24 hours, 65,000 traders were liquidated. It's not that hard for it to happen. Now, let's take a look at what happened here with cryptocurrencies. Now, as you can see here, I'm just going to move this over. Back on April 17th, BiteMEX, BTC, 272.89 million longs, 9.26 billion in total here was lost. Just think about that. All of that money there was lost in liquidations, total liquidations there from people who were long Bitcoin. And the same thing happened almost exactly a month later, May 18th, where 7.56 billion people lost their shirts. It seems like, I hope this is to happen again on June 17th or June 18th, but people are losing their shirts in Bitcoin. We talked about Cathie Wood. Now let's also talk about our main man, the Spac king, the new Warren Buffett, Chamath Palihapitiya. Nobody's going to listen to Buffett is what Chamath said. Chamath Palihapitiya called himself the figurehead of the Reddit trader era in a recent interview. And here are his 10 best quotes. I'm not going to read through them. But also you have here on Twitter, this guy posting a bit from the 2020 annual letter from Chamath's Social Capital. And at the very end of this letter, he compares Social Capital with Berkshire Hathaway. And again, this is just, insanity. Why do this? Why do this when there's so much negativity surrounding your name? If anything, you should be laying low, maybe trying to tell people what exactly he was doing, which is trying to take retail trader money and putting it into SPACs. Of course, you can say others were kind of getting into it, but for the most part, the people who are funding SPACs are retail traders. It comes from retail money. So again, the main thesis here is that as safe haven plays have fallen out of favor, because if you take a look at them inflation indexed, you might even be getting a negative return. People are trying to seek yield in any way they can. Now, it's not just retail traders. You even have pension funds who are trying to seek yield wherever they can. They're going after venture capital and trying to seek yield. So the same thing obviously is trickling down to retail investors and people who have 401ks and 403bs trying to pinch pennies together so they can have a decent retirement. The unfortunate thing is that as you seek risk, you need to seek risk management. Now, I know that's something that people don't like talking about, but when you start to see assets with fat tails like this, and you're putting the majority of your life savings in them, and you're just saying YOLO and you're saying HODL, that is not proper risk management. You need to know how to diversify and distribute your capital in a way where you won't be succumbed, or you won't have to succumb to the negative movements against your positions. So when it comes to the Pied Pipers of market madness, you can talk about Cathie Wood, we can talk about Chamath, we can talk about Elon Musk. The thing is that these guys will be fine at the end of the day. It is me, it's you, and it's others who will be, the lambs led to slaughter here. Again, energy and money are almost the same thing. These people are trying to take as much energy and money into their own infrastructure, making it low entropy as much as they can. And they're trying to rid you of your energy and money. You would be considered more high entropy as you lose your money. And that energy has to go somewhere. And they are establishing infrastructures so they can suck that energy up. So I'm telling you this so that you can do your own due diligence, similar to like this. You see this right here? It didn't take me too long. I went on Yahoo Finance. I downloaded some stuff. I ran some correlations. Very simple. This is very basic stuff here. When people tell you to do your own due diligence, that doesn't mean to go onto Wall Street Bets to the DD section and read what someone else wrote. It means you have to run these numbers yourself and just think about what people are really trying to do here on Wall Street. Wall Street now, as people thought before, yes, it could be full of some sleazy people, but now you could say Wall Street has now transitioned to Twitter, and we have some of the sleaziness happening there, where back in the day, people might have been calling you up and saying, hey, Mr. So-and-so, would you like to buy this penny stock? It's going to go to the moon. Now they're saying, hey, Mr. So-and-so, want to buy this new crypto? It's going to the moon. You want to get into this ETF, it's going to the moon, so on and so forth. It's happening again, and it happens over and over and over again throughout history. If I can, I would like to make one recommendation here. Let's see here. I don't even know how to spell this correctly. There we go. If you guys have money that you would like to spend to learn a little bit more about the history of some of the madness of crowds and just madness of Wall Street in general, I would highly recommend buying this book here, Reminiscences of a Stock Operator. It just tells you everything that people are doing to try to rid you of your money, down to stockbrokers, down to people who are trying to give you hot stock tips, so on and so forth. Now, it doesn't, I do recognize that this channel that I have right now, I talk primarily about silver and gold. Now, I talk about silver and gold because to me, it's one of my favorites right now. I have said that there's a negative, strong correlation between gold and the U.S. 10-year Treasury yield. It's about negative zero point 0.8. Now, once that actually goes against gold or silver, I've actually stated on this channel that I intend to sell some, but my overall view is that because it is a commodity and it's a, let's say, asset that can't just blow up, I like to call it coma proof. It's been around for millennia, not just a couple of decades as a company or maybe 100 years, but it's been around for millennia. I talk about gold and silver with strong conviction. Now, I don't look at it as a get rich quick scheme. I look at it as savings and potential wealth that I would like to pass down to my kids. And if I were to liquidate some in order to reap some reward in the short term, I will. But I'm also not here saying to people, hey, you need to get into gold or you need to get into silver and you need to hodl and you need to throw your life savings into this stuff. I'd never say that. Everyone should do their own due diligence. I happen to like talking about gold and silver, but I also like talking about just general economics like this video. So guys, I think my time is up. It's been a while. So just wanted to talk about market madness a little bit. Let me know what you think about this in the comments section below. Thanks again for watching. Please hit that like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.